people, and capital. And some of the adjustments to the...
We also mentioned last week, of course, the Bank of England, they cut interest rates for the first time since 2009. They went ahead and lowered their main lending rate to a record low of 0.25% from 0.5%. So for those, if you were watching that live, if you looked at the price of gold, we immediately saw a rally back up to the weekly highs, just under 1,365 US dollars, within $10 of the 2016 highs and the 2-year highs on that breakout. And I would be paying a lot of attention to this because gold is very sensitive to rising US interest rates. Okay, so when we've seen interest rates on the table in America by the Reserve during FOMC statements, if there is hinting of interest rates, that often cause gold and silver to sell off. Now, since the start of the year, there's been speculation that the Federal Reserve would go ahead with interest rates. In fact, right at the beginning of the year, it was forecast they would go ahead with 4 interest rates, which was reduced to 2. But now we've not seen any interest rates this year. This puts the Federal Reserve in a difficult spot now, given that the Bank of England has now gone ahead and reduced their interest rates as well. And bear in mind that we've got that inverse correlation of the precious metals to interest rates. If interest rates go down, that bodes very well for gold and silver. If the US cannot go ahead and increase their interest rates, that means that we've got a lot of underlying support here fundamentally for the precious metals. For that reason, have them on your radar, guys. Definitely you want those on your watch list.
People and capital. And some of the adjustments to this new reality may prove difficult, and many will take time. But the UK can handle change. It has one of the most flexible economies in the world,